Ladies and gentlemen, Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is down quite a bit here on the S&P, 1.29% negative. Nasdaq did get hit harder today, 2.1% negative. Same with the semiconductor. These two guys got hit hard today. However, Dow, small caps, the Russell 2000, they're down about 1%. Transport held up better today along with the banks. Energy's green today. Energy's been showing some relative strength versus the S&P 500. They've been seeing some green prints while the S&P 500 has been, struggling as of late. Biotech got hit also 2% negative. Healthcare down 1.5%. Home builders held up well. Utilities up today 1.3%. Retail down 1%. Emerging market 1.5% there. So definitely a red day, down day, except the fact that we did see energy, utilities, printing green today. Bitcoin is up 5% today. Gold, silver, miners up a little bit. Dollar is down a little bit. Oil's up, obviously, with energy being up. Treasury bond is pretty much flat. VIX popped 8% today with the equities being down. Let's stick with the S&P 500 ETF. Spider, 65-minute chart here. So it looks like we gapped down here, right? This is where it closed yesterday. We gapped down. Good thing about that is the gap was filled right away. I mean, that's gonna make things a little bit better for the bulls. At least there's not another down gap open. We already got these two gaps that bulls need to worry about. So adding another down gap, things could be much more hectic, but at least buyers got up there and filled that real quick. And with that, we saw that tankage on the first hour and the second hour. And then the third and fourth and fifth, the sixth hour, we saw a little bit of oversold bounce. But keep that in mind though. That short-term moving average, that was the vicinity. We needed to reclaim that. We talked about that on the last week's update, that as long as price below that level, as long as we see the short-term moving average declining like that, we need to give benefit of the doubt to the sellers. And also talked about as long as this gap is open, things are going to get hectic. And again, this time around also, bears made sure bulls don't even get close to this level. Remember right here, a lot of bulls thought maybe, we see a move, not able to do that. Bulls try to make a run and then another downturn. We got these lower highs going on here, continue to cultivate lower highs and lower lows. And obviously in the short term of things looking pretty gloomy here for the buyers. Overall, this is lower lows here in the short term of things. And with that, things are looking not too bright at this level. So what the buyers need to do, first things first, really need to reclaim that short-term moving average. You see that short-term moving average? It is not a coincidence. It is not a mistake. It is not a random occurrence that, when the bears brought it down, they waited until, we hit that short-term moving average. And I think this is a level that a lot of buyers kind of hoping to see a follow-through. Some of the things that we talked a lot about, if you've been watching my videos all throughout this year, one-day price action isn't enough. You need to see a follow-through. And, we need to see the short-term moving average acting as support, but it's continued to act as resistance here. And so buyers got a lot of run that needs to happen here to change this momentum, change that sentiment back to bullish. It's not going to happen. Not only bulls need to get up here and get above this resistance at 435, but get up and fill this gap. You see my midterm moving average? It's been moving sideways for this entire time. So my midterm moving average isn't quite curling down yet. It's not, you know what I mean? We're not seeing that midterm moving average, declining yet. We're moving sideways here. And that tells us that currently in the midterm of things, we're trendless. We're kind of in the midterm of things, right? And this is why I'm more neutral to bearish in the midterm, but obvious in the short term of things. That selling pressure continue to, increase here with these lower highs. And it's coming all the way from September highs here. You see these lower highs and lower lows here. So things are not looking too good. We still on this downtrend. The short to midterm, because it's been pretty prolonged here over a month. The short to midterm downtrend is continuing to cultivate and establish here. So, you know, at this point, you know, what bulls need to do is that this is the level where here, let me put. So you see 422. Bears obviously need to come back down. This is the low. That's the pivotal low here that was cultivated back in July. So bears want to come back down, reclaim that, and maybe even turn that into some kind of a sideways move. And bears going to probably hoping for some kind of a topping pattern. Right now, we could still, in the midterm, right? In the short term, no doubt we are in a downtrend, no doubt as there's selling pressure present. But in the midterm, if bulls can still bring it up, we can still categorize this level as potential higher low, because you can see that low, we're still not that level yet. That's 422, but a lot of price, we need to see a lot of evidence for the buyers before we can say that buyers are gaining momentum again. They are losing control, and bears are really keeping this thing going to the downside. Let's check out that oscillator and see if we can extract any more information. So interesting to note that oscillator is kind of elevated a little bit here. So we got these higher lows working on the oscillator while the price is cultivating lower lows here. So we have a certain elements of potentially certain properties, potentially this becoming a bullish divergence, despite the fact, I mean, we talked about this on the last night or Thursday's video, and I have been tweeting things out on Friday. You can check those tweets out. It's not completely, nullified or neglected or negated as of today, despite the fact that we did see that downturn today, because you can see bears are not able to bring it all the way back down to the bottom of the span over extreme oversold level. While the oscillators are kind of elevated, this could potentially become a bullish divergence, but we don't know as of today. You see right here, we're just hanging around this level. What bears need to just not even deal with this, just completely dismantle this pattern, this formation, and break below it, come down and hit that oversold level. That's what bears need to do, but you got to be careful here, because if the buyers see another rally and break up, you know what, let's put that there. It's like right about here. If we see buyers reclaiming the short-term moving average at 434 and break above this resistance at 434.61, and you notice that I put in that Fibonacci area level there, measuring from this low right here. You can see that, right? So basically this Fibonacci is telling us as long as bulls can defend this area, there's still a chance in the midterm. There's still a chance in the midterm of things. Bulls can still turn it around. So that's what the Fibonacci is telling us. And looking at things in midterm, obviously, again, like we've established the fact that in the short term, we are in a downtrend. The short term, things are not looking too good for the buyers. Or things are, very, very hectic information. Keep that in mind. As long as these gaps stay open, this is what happens. When the gap doesn't get filled right away, things get hectic. And that's what we're seeing here since September, right? Bulls failed to fill that. And bulls were not even get close to it this time. And we got close to it here, failed to fill that. And then things got, shenanigans and another shenanigans today. So I think only hope for the buyers right now is that potential bullish divergence and that Fibonacci area currently in this vicinity. So let's see how the market plays out. Obviously, again, bears need to come down 422 and make this into an equal low. That's the best case scenario for the bears. And obviously want to bring it all the way back down and lose it and maybe go after this gap and fill this gap, because that's an up gap, right? So we're currently battling at this vicinity. Bulls are trying really, really hard to turn things around. It's not so easy because this entire year, market has been seeing this V-shaped reversal, right? So what happens is, psychologically speaking, so many people are market has been conditioning market participants to see another V, because that's what's been happening this entire year. Remember, we've been seeing these V-shaped reversals every single day. This time, what we're seeing is market saying market is doing something different, just in case, some of these people are, being too complacent. So once in a while, market will do this just to shake people out. So I reckon that things are gonna be much more difficult now that we already got these lower highs and lower lows playing out. Only thing right now keeping the buyers to see any kind of hope in the short to midterm is that bullish divergence. So I'll come back for you. We'll reassess the situation. You know exactly what to look forward to tomorrow, right? If you're looking for higher prices, the bullish divergence needs to play out. This bullish divergence here, right? That means we need to see a move as quickly as possible, probably tomorrow, right? If not, bears start keep bringing it down. And if we negate and nullify this pattern, things gonna be much hectic for the month of October. We're already early trading days of October, so this is gonna set the tone for the month of October. See what happens here. If the bulls can get up and even fill this gap first, I think at that time you will see a lot of confidence coming back into the market. But as long as bulls are continue to struggle, things could be hectic for the entire month of October. Again, I'll come back for you tomorrow, reassess the situation. We'll go from there. Enjoy your evening and good luck trading tomorrow.